Welcome, folks. This is the market review for Euro USD and Pound USD. So, as you can see, we have two charts, one for British Pound, one on the upper side, and we also have this, which is the Euro USD. So, as you know, these two pairs move in tandem. So whenever you see maybe a trade happening on this particular asset, it's also happening on this. So today we had a very good run to the upside. We had a clear buy side for pound, as you can see right here, and also we had this inefficiency. For euro, we had this clear buy side, we had this inefficiency, and we also had this buy side that was residing above these relative equal highs. So we had that. So during the London Open killzone, we had a run to the downside, taking out the sell side. As you can see here, we had a very clear sell side that was residing below these relative equal lows. So we had that. So price came, took out the sell side, and then reversed to the upside. So there were two trades that were here. As you can see, you were inside before this move down. You were working inside these inefficiency. So this would act as a silver bullet, but also if you didn't get this move to the downside, this would have been something that you could have capitalized on. So there are two things that were happening here. So one was, if you went short this gap, that, so we had that, and then an aggressive move to the downside. So as I always teach you, as you can see here, while price was up here, it came down but did not take out this low, went back high again. So there is a little inefficiency that is right here. So we had this inefficiency. So we mark that. Yes, we had that. So we traded inside that, and inside we had this order block right there. So you can also extend that through. So we had that run into the inefficiency and inside the order block, and then price reversed and went inside this gap. So and as you can see down here, at this time was around 2:30 a.m. This is always on New York local time, as you can see here. So your trading view should always be on New York local time. So at this particular time, you could be selling short right from this area, because it's inside the ICT kill zone, whereby we have 2 to 5. So we had that run lower, taking out the relative equal lows, and eventually these two lows, this one, and also we had this low. So that was the run on liquidity, and then smart money reversal. Then we had here we had a fair value gap right here, right there. So price went up, traded inside this fair value gap, came down, traded inside this one, then moved to the upside. We also had This is also a breaker, which is a low, high, lower low. So you can take this candle, extend it to the right, the up close candle. So we have that, and as you can see, price was supported right at the breaker right here. So you can see when price came back down again, price was supported. We have a breaker, and also we have a fair value gap right there. So we had that, price came down and then reversed to the upside during New York Open. That was for cable, and then we have this Euro USD. So there is a reason why I'm showing you both charts. So today we had gap on both assets. So we had this opening gap. So like as you can see, we have this a volume imbalance, whereby the close of this candle and the open of this candle, we had that gap down, taking out this low and reversing to the upside. So we had that gap, and also for euro we had the same. So you can always take that, extend it through the chart. We'll talk about that in later videos, but today we had that was only to show you that we had that. So here we had euro, it also gapped right there. So you can extend that through. That should act as a magnet for price. And as you can see, this being our silver bullet, like we have here, we traded down into, we have an inefficiency there, and then we have this volume imbalance. So we expect price to revisit and balance those imbalances. So the real take of the day was we had an SMT divergence, whereby these are correlated markets, whereby if this one makes a lower low like it did here, this one is supposed to do the same. But as you can see, we had an SMT divergence from these lows to this low, from this low to this low. So it would look something like this. So we have that, and also we have this, that. So that is what we call SMT divergence. You don't need an indicator to show you divergence. So you use SMT divergence to confirm, just to confirm. Maybe when you saw this one making a lower low, and this one was quite reluctant to do the same as pound was doing. So that shows that euro is way too bullish for it to make a lower low, and that is a signal that there will be a reversal. But don't always look for that, and then you always say that that's the only thing that you're looking for. So when you see a divergence, couple it with other things that are salient to price, that will act as a confluence for you to frame and get into a trade. So we had that, we had the SMT divergence, as you can see, this one making a higher high, failing to make a lower low, like its counterpart here making a lower low. So this one took sell side. Yes, we took sell side below these relative equal lows, trading inside this imbalance, and eventually repricing to the volume imbalance right here. So we had that. So and this was in between the London Open kill zone, which is, as you can see, that was around 4 o'clock. So 4 o'clock in the morning. So we had that being an SMT divergence at the London Open kill zone. Now that you can trade eight of them, but you might find that the one that has made a lower low won't go high as much as the one that has not made a lower low. So we had that, and as you can see, pound Euro USD had quite an aggressive move to the upside, and like pound here. So we had that. So as you can see, Euro went, cleared all these highs, but for pound it did not. It only went, cleared these highs, traded inside these fair value gap, and then reversed to the downside. So whenever you see an SMT divergence based on a higher time frame, maybe something like a 15, 30, 45, 1 hour, 4 hour, just based on a higher time frame, then you should know that that should act as one of your confluences as to why you should enter into that trade. So we had that. So now we're going to dive into 1 minute chart in both assets, and then we see how we could have framed the entries. So let's start with British pound. So we go into a 1 minute chart. So we start with the 2:30 a.m. Silver Bullet. So we had this run to the upside, trading inside these fair value gap. We had a gap. This one doesn't look like a gap. We have some candles that are in between. So we had almost to this gap right there. So we had that, and price went repriced to the upmost fair value gap. So and we had this low being taken right there, and then we had this move to the upside inside the fair value gap, and also we had an inversion fair value gap right here, as you can see. So we had this being an inversion fair value gap, and also this gap as well. So your position should have been placed right there. Your stop be placed around that high right there, and then aiming for the relative equal lows that we had here right there. So that was the Silver Bullet. We had 8.56 hour trade. So with that, aiming for the relative equal lows, that was an 8.5 hour trade. If you could have held a little bit, then we had almost something to do with how many hours? We had 13.16 hour. So that wasn't a bad trade for the morning session. And then now we had this when it traded into the relative equal lows. We had that run first, the initial run, and then we came down back again, taking out the sell side, and we had this swing high being taken right there, and then that was a market structure shift. So we had a fair value gap right there, and then we had this order block right there. So your long positions would have been placed right in there, and your stop be placed right below the order block. So what could you be aiming for the low hanging fruit? Just above this high, that would have been a 9.93 hour trade. Also, you could be aiming for something like that. That would have given you 11.1 hour trade. And also, since it went a little bit higher, I could have aimed for these highs right there. So that by itself was a 21.23 hour trade. So as you can see, it was quite profitable. Adding this to this, that is almost this is 21, this is 13. We're talking about almost 35 hour trade, I guess. Yeah, we have something like that. So that was quite profitable during the London Open killzone. Then we had we didn't mark our breaker. Then we go back to the 15-minute chart. Then we mark the breaker. Then we extend it through the chart. So let me check this. You mark the most up close candle. Mark the whole of it. And then extend that forward. So we go back into 1 minute chart and see what the New York session would have given us. So we had that. This being the New York price went up, came back inside the breaker, the bullish breaker. We had that. I think today we had news at around 8:30. This was news. It came down, took out the sell side, and then it reversed to the upside. So we had that until we took out these highs. Yeah, and that was it. So to me, trading London is always kind of the best, using maybe something like the pound dollar and the euro dollar, because they are quite lenient on that London Open and the ICT Silver Bullet. So for me, I usually trade London more than I do on New York. So but it is always good to watch such things come into fruition, and it respects what we know as ICT. So we had that. If you went long right here, taking partials maybe above this high, and or maybe taking partials inside this fair value gap, maybe above these highs, and then going to break even, and then waiting for such a run. Then now you can trail your stop maybe and wait for your TP to get hit. So that was it for for pound dollar. So let's head over to euro. So here was 30, 230. So as you can see, let me just bring this back. So as you can see, pound was making the lower low right there, and on the silver bullet, see this line, as it was making that lower low, euro was unwilling and it made a higher high. So this one was the best to trade, because it made a lower low. But in terms of buying, we buy this. So we had quite a nice run into the 4 o'clock. So we had that. We traded inside this gap. Yes, we colored outside the gap, but when you look in a 15-minute chart, there was no candle close below this gap. So we had that, and then we had this swing high being taken right there. You could have gone long inside. You had a swing high right here, and this took out that high, and then it left us a fair value gap right there. So that will be your entry. And then your stop be placed right there. What could you be aiming for? You aim for something that is to the left. So we had these relative equal highs right there. So that would have given you a 10.33 R trade. So and also if you could be aiming for these highs right there, so that would have been something like that. That would have been 21.22 R trade. Let me see if we went. We had yes, we had these highs right there. So if you could be aiming for that, we had that. That gives us 25.5 R trade. So our stops are so small, so that's why the risk to reward is so crazy. So we had that also. You could have held maybe on that position for quite some time. Maybe you could have gotten maybe something about 30 R. Yes, 35.67 R, which is crazy. So if you understand these logics, these are concepts, your risk will be very small and your rewards will be quite rewarding. So these are quite a good trade, because even if you are to lose one trade, and then this would recover that trade 35 times. So it only comes to risk management. And as you can see, we had here we had explain something. So this is algorithmic. So as you can see, this is the midpoint of the gap, and when price passed above, traded above the gap, it came down, touching the midpoint of the gap, and then we had that move to the upside. So we had that, and if it was to take partials, could be taking partials above these highs, and then maybe placing a stop right below the midpoint of this gap. So this is quite a balanced price range. So price may not come back below these lows again. So and then we had this took out the sell side, and then that was when price moved aggressively to the upside. So you could be taking partials right there, trailing a stop, not too close to where price is, and then anticipating for a run into your TP and all that. So here we had that drop for, I don't know, I can't remember what news it was, I guess, but we had these smooth edges, took them out, traded inside these order block right there, and then reversed to the upside. So we had that, and also we had these up close candle. We had that being a breaker right there, came, hit it, and then moved to the upside. So we had that. So right now we're pretty we're chopping around, but by now you should not be trading. This would have been enough for you. So I guess today you've learned something. Today we've learned about the SMT divergence and how to use it. But don't always look for SMT to trade off of, but try to blend some ideas and concepts within the SMT and other PDRAs. So we had that. That was quite a fruitful day. We had crazy risk to reward trades. So we had that. And I guess if someone has any question, drop them in the comment. I'll get back to you. Even if you want, maybe you don't understand something, you want me to explain it live on the chats, you can always do that. I can always share my screen. We explain what you want me to explain to you. So feel free to ask anything that you feel like it's disturbing you or you don't understand. So guess that's it, and until I talk to you next time, be safe.